Okay, well this is a little video on letting it center and break, hook, and go. You know, a lot of new traders with us have a hard time with understanding what that means, so here's a little quick video to kind of clear up that understanding of that, all right? So, first thing I'm going to do is go up here to the New Zealand chart. I'm going to auto scale a 10-minute chart here. So it's auto scaled. And we're going to do with let it center before you enter. Okay? So I'm on a New Zealand chart, and if we take a look over from this part here to this part right here, that is 22 hours of trading with 10-minute charts. That means we have all three sessions are represented here, right? So we're going to start over here on the right hand side and going to work our way to the left, okay? And we're going to look for any candles that do not center. Okay, we got one right here that does not center here, okay? So it comes up and it doesn't and it goes, okay? So there's one right here. There's another one right here that doesn't center until over here, and it centers right here. So that is not, it did center here, just took it a few more candles, okay? Here's one that takes off, as you can see, but it's centered right over in here, all right? So as we're looking right to left, do we have any candles in here? No. Okay, so the only candle that did not center on the New Zealand in 22 hours was that candle right there, all right? That's 22 hours of trading, and what does that tell us? That 99% of the time, the market centers. Before you enter, let it center. You say, okay, well, you're on the New Zealand, of course it's going to do that. Okay, well, let's go up here to the Australian, and let's see what that does here. I'm going to put this down to a 10-minute chart, and here we got, when we're looking at this spot right here, we're looking at 22 hours of trading, all three sessions, okay? Let's start over here to the left, and we're going over to the right, okay? So we see there's one candle right there that does not center. This one goes all the way up to here, and then the next one comes down to here. That one centers, okay? So this was a big candle. It's centered right there, all right? So there's one so far. As we look across here, we're looking for any candles that do not center themselves. This one takes off right here, centers over here. This one takes off, centers right here. And this one takes off and it centers right there, okay? So on the Australian market, this is the only candle right here that did not center. One candle in 22 hours. What does that mean? 99% of the time the market centers. Okay, yeah, but you're using the Aussie and the New Zealand. Why don't you do the Euro? Because I love to trade the Euro. Okay, well, we'll just go to the Euro. And here's 10 minutes right here, all right? So we're going across here like this, and we see now all these candles right here, and then this one right here does not center. This one centers right here, okay, as you can see. Comes up, next candle comes down on it right there, all right? And then we're looking across here, and this one right here does not center, neither does this one. There's two candles there, but in this case there's no paint, so you would not be taking any trades in here, and then the rest of them do, all right? So out of 22 hours of trading on the Euro, there are three candles that did not center, all right? All right, so you can see overwhelmingly the market centers, all right? So what does a center mean? That means the candle goes up in the air like this, and the next candle comes down about halfway, and then it takes off and goes. Just the opposite if you're going down. If you're going down, the market goes down, the next candle comes up halfway, and then it goes to the downside, all right? Before you enter, let it center, all right? Now that's the first thing that gets traders kind of messed up, all right? The next thing is break, hook, and go. All right. So anytime we're looking at a currency that we're waiting for something to break, all right, we have to wait until the market centers on it. So let's go find a currency. We've already looked at the Euro. Pound has been horrible this week, so let's take a look at the Aussie here. All right. All right, so we're going to go back here. I'm going to go up to a 60-minute chart because it's just more candles. It's easier to see here. All right, so let's see if we can find anything. Well, maybe I better take it down a little lower to a 10-minute chart where we can see if it broke and it hooked and it went. Okay, here's one right here. All right, so here is a bear flag. All right, that's called a bear flag right here. Right there, it goes like this. It's called a bear flag. So when we break the bear flag, we need to break, then we need to hook, and then we need to go. Well, there it is right there. Break, hook, and go. All right. Let's see if we can find any more as we go along here. Okay, here's one. Here's another little one right here. Okay, there's a little bear flag here. Oh, sorry. Let me just draw this freehand. All right, so there's a bear flag here. All right, so we break, we hook, and then we go. See that? Break, hook, and go. All right. When we break something specific, then it usually hooks back to where it was, and then it goes at that point. All right. So we always look to break, hook, and go. Here's one that has to break this line. All right. This line right here. You see it broke. It hooks very little there, but it still broke, hook, and went. All right. And anytime you break something major, that's what you're looking to do, okay? And, this one right here doesn't break and hook, okay? So that's a trade you missed the opportunity if you were even looking for that trade. You would miss that opportunity. It doesn't happen very often, so it's not something to worry about. Here's a specific line. There's a support line running right here. What does it do? It breaks, it hooks, and it goes right there, see? All right? And they do this over and over and over and over again, all right? Let's get off this currency. That's the Aussie. Let's go to something else. Maybe let's go to the Euro Yen, okay? Oh, let me go to a chart where it's got some lines on it. We'll take this over here. All right, let's go to a 60-minute chart here, and let's just see if we can find anything here that would make a little bit of sense to us. Something that would, let me go down to a 10-minute chart because it's too big. I want you to see the breaks and the hooks. That's what I want you to see. So here's a good example right here. I'll take this down here. All right. This is the line that has to be broken. You can see it's a support line. They break, they hook, and then they go. See? Break, hook, and go. This is what they do, folks. All right. So you have to get to the point where you're disciplined and wait for them. What happens to traders? They think that they've missed a move. And so what is taken over? Emotion. Fear that you missed the move, and greed says, oh my gosh, if it goes, I'm going to miss all these pips. And so fear takes over, greed takes over, and you make trades based on the emotional market movement of the candles, as opposed to a disciplined approach to trading, which is let it break, let it hook, and then take the trade. If it takes off and goes, you can't make the trade anyway.